Hey, good morning, everybody, and happy Monday. Happy 4th of July holiday. I'm sure many of you are enjoying a long weekend, and that's fantastic. I will let you know that I will be writing the MMT Trader report today, or finishing it up, I should say, and it will be out later. So you will be getting that if you are on the list. You will get that later. If you would like to receive it, just go to my website, pitbulleconomics.com. And right there on the homepage, it says get the 30-day free trial. In the meantime, you can download all the back issues and read those while you're enjoying your little holiday break here. Not so little, actually. It was quite a long holiday weekend. What's going on? Typical, very thin markets, so things are getting exaggerated, I think. We're seeing a pretty strong sell-off in gold, down to the lowest level now since early May. By the way, I sent out an email with regard to gold and what has happened with the market composition, with the open interest. We have seen the largest net long liquidation by speculators since the 3-week period ending May 16th. Of course, that was followed by a $70 rally, which took gold almost all the way up to $1,300 an ounce. So I suspect we'll see the same thing this time. Let me just say that the entire sell-off has been accompanied by a net decline in open interest in the gold contract, which means that this sell-off is not receiving financing, but in fact the financing is leaving as it goes down. For a move to be sustained, you need financing. In other words, more money coming in, more new positions coming in. This is the opposite. So I am absolutely not worried about that. In addition, we see commodity prices very strong. If you look at the grain complex, if you look at the agriculturals, very strong. Wheat, oh my gosh, up at almost $5.50 a bushel this morning. We are long in the MMT Trader report from $4.05 a bushel. So that's almost $8,000 a contract profit on that position. What else? We see some weakness in the yen. So dollar yen rallying up above 113. I'm already short and we'll be looking possibly to add another unit as we get up into these above the 113 level. I'm looking for something to tip me off here, maybe just a volume spike. But again, this is a very thin trading environment, very thin market environment. People are away, they're on vacation, they're taking a break, so moves can get exaggerated. As far as stocks are concerned, we're seeing a bounce. Once again, we've had this very choppy up and down action. I do want to bring your attention to the fact that right now we have 3 states that are shut down, or 2 that are shut down, a third possibly. So we have New Jersey, state government shut down. Maine, state government shut down. Illinois, the biggest of all of these, where their credit rating is now threatening to be reduced to junk, and possibly a state government shutdown as well. In addition, there are 6 more states, I don't remember them off the top of my head, but 6 more states, Connecticut, a bunch of them, in the same situation. So, and of course, we're going to have that, we're going to be facing that potential with the federal government when we come up against the debt ceiling next month. So stocks are rallying. Obviously, state budgets, which is something I talked about last year or at the beginning of this year, how state budgets are going to be very negatively affected this year. There were many states that were not going to be able to balance their budgets, which is a requirement for the states, okay, not for the federal government, although they act like that's a requirement. And it may soon one day become a requirement with a stupid balanced budget amendment. But I don't care anymore. That used to make me angry as hell, but I know how to make money from that, so I really don't care one way or another, because I'll make a ton of money if they do that. So you have a situation now where state governments basically shutting down. We could seriously have a negative GDP quarter in the second quarter, although June is finished now, the second quarter is in the books. We could be close. And don't forget, they started the second quarter where the Atlanta Fed had a 4.5% GDP forecast. We're going to be lucky if we hit 1.5%. Lucky, I'm saying. And we could have a negative print for the second quarter. Meanwhile, stocks are going up on anything, on everything they go up, irrespective of economic conditions, which ultimately and fundamentally dictate profits and dictate where stocks are going to go. So you have it, folks. It's a highly, highly speculative situation. It's not going to last. And all the things that I've been saying, particularly, how about the stagflation forecast, which I made back in January? You had Alan Greenspan on Fox Business last week on Friday, I believe, talking about stagflation. Now he's calling it out. I called it out in January before anybody saw it, folks. So there you go. So go sign up for a 30-day free trial of MMT Trader. Go to pitbulleconomics.com and get your 30-day free trial. The rest of you will get the report later today. If you're kicking back on a beach somewhere, having a cocktail, have one for me. Enjoy. Bye-bye.